Hello, I am Piyush Dave, a fintech professional, and today I am going to show one more algo trading strategy based on super trend. Many traders follow the super trend techniques in the technical analysis, but I come with the idea of combining this super trend with ATR and a lot of new things which I have added in this algo makes this algo works very beautifully. So first, I'm going to start collecting the 20 price from exchange. Now this is a live feed which is coming from market. We have no control over it. And based on that, the ATR will be calculated. Now why this ATR is required to understand whether the market is calm or volatile. Now let me tell you what is the meaning of this ATR, average true range. So suppose the first value is 100, the second value is 101, the third value which is coming from market is 102. So gap of each value you can check out. The gap is 1 1. So here 1. Next gap is also 1. So what is the average of this? 1 plus 1 divide by 2. So the ATR is 1. Now let me take one more value, 100, 101, 103. So the gap, first gap is 1. The first gap is 1. The second gap is also 1, sorry, 2. So the ATR is 1 plus 2 divided by, we have taken 2 readings. So the ATR is 1.5. Now this collects the 20 prices, and 20 prices will be divided by 20. Each of the gap will be calculated. The ATR will be calculated. Once the ATR is calculated, we can find out whether the market is calm or volatile. If the gap is too much, then we can consider the market is volatile. And if the gap is very small, the market is calm. Normally, we try to take the trade in calm market. If there's a volatility, then algo may trigger the wrong part also. So we need to decide whether to trade or not based on ATR. One more thing we can do, we can decide which algo to work for a calm market, which algo to work for a volatile market. Now that based on continuous backtesting method. So some algo works very beautifully with volatile market also. Now let me tell you how this super trend is been used over here. So the super trend is very simple logic, and that's basically follow a trend. Now I have added one more thing that make sure the volatility also play a role in this algo. The upper band in the super trend is been called as a resistance, and the lower band is called as a support line. If the upper band breaks, we consider it's a upside breakdown, or we can say breakout, and we will take a long trade. And once the support line is breakdown, so upper one is called breakout and the down one is called breakdown, then we can take a short trade. So the 20 price which is collected over the window have the maximum price, minimum price, and the close price, last tick of the market. Now based on that, we are going to calculate the mid range of the market. Now what is the mid range is high value divided by low value divided by 2. So that basically the fair zone or a balanced line will be calculated. Let me explain this with one value. So the high value in the window is 105 and the low value is 95. Then 105 plus 95 divided by 2 is 100. So 100 will be the midpoint of that range. Now, how to calculate the ATR? I already told you in the start. The previous value minus the next value, and we will keep on collecting that and divide by the number of reading. Now that basically tell us how much market is volatile. So initially, if the value of ATR is come 2 or 3, it's calm market, and if the value of ATR come 20, 30, then 10, 20, 30, then the market is considered to be as volatile market. Now let's create a band for the super trend. So first is upper basic and the second one is called lower basic. So upper basic is HL2, that means your this value which we have calculated over here, high plus low divided by 2, plus ATR, the ATR which we have calculated before, multiply by multiplier. Now I'm going to explain what is the meaning of this multiplier. Next, lower basics will be calculated, HL2 minus ATR. So this will be plus, this will be minus ATR into multiplier. Now I have taken multiplier over here as a 3. Now let me explain why it has been 3 and with one example. So HL2, suppose we have got 100, ATR is 1.5, the multiplier is 3. So the upper value will be calculated as 104.5. Above that the trade will take place and below that the trade will take place. Now why to choose 3 as a value? So if we choose the multiplier as 1.5 or 2, it will be very tight range. So low volatile market we can choose 1.5 or 2. 3 and 5, 3 to 4 is basically the wide range, more reliable. So based on that, we can have the intraday. For intraday, we can have 2.5. Volatile, we can have 3. So 3 is a basically to avoid the faster noise, or we can say avoid proper noise. So that's why we have taken the value as a 3. For a swing trade, for a crypto market, we can keep the multiplier changing based on the requirement. So basically the 3E works well with the algo and it avoids noise also. So that's why the multiplier which has been taken over here is 3. Okay. Now when the trend is up, now this is a core logic. So we have 2 upper basic available. At the start we have only 1 basic for the first cycle, and after that we have 2 upper basic. The upper basic will be calculated based on this logic. Okay, ATR is keep on changing for sure, and we got 2 different upper basic and lower basic. So for the first cycle the upper basic is only 1, but for the second cycle we have 1 upper basic and the previous upper basics. For the second cycle we have the upper basic from first cycle that considered to be as previous upper band. For a second cycle I'm talking about, and for the second cycle it's called upper basic which has been calculated currently. So we are going to choose the minimum of that. Now why this minimum of that? So that won't change the upper band continuously for each change in the price. Similarly, if there is a downtrend, we are going to find the max. You can see here minimum of the upper band, and over here we have maximum. So lower basic minus previous lower band, so that we will not going to jump fast on the lower side. So this will help us to basically get the smooth range for the realistic trading lines for the market. Now, okay, let me explain this with one example. Now this will be really helpful to understand this with one example. Okay, so the previous band is 104. The new band which has been calculated is 105. Okay, so now this is more greater than this value. So we'll not change this 106 in the range, because we are going to take the minimum of both. So minimum of both is this one. So my uptrend still be after 104, not 106.5, even if the new basics has been calculated. So this will help us to tight the upper band properly, and it avoid the unnecessary stop loss also. Now similarly, if the trend is down, so we are going to find the max of both the things, max of both. We are going to find the max of both. Okay. Now this will help us to understand the logic very clearly. So max of both lower basic and previous low basic. It won't uh, trigger the wrong part, and it smooth the range. Okay, now let me explain this with one example. So the previous band was 95, the lower new band is 92. Okay, so we are not going to choose this 92, we are going to choose 95 as a lower part. The upper band, upside, it prevent the upside problem, and this prevent losing the downside problem. Okay, so we are going to keep 104, the mean value of both the values, and here we are going to keep the max value of both the value. Okay, let me write it down so it will be really clear to you. Okay, so the previous band was 104. Let me explain this. And 95 was the value. Okay, this was a band, for example. And there's a price change happen, and we got the new band as upper side is 106 and the lower size is 92. Now, if we keep on changing this band, what will happen? It is not going to trigger the upside band. If this value is smaller than the new range, we are not going to change it. And if this value is higher than this value, we are not going to change the band. So we will keep this band as it is. So keep it as it is, that is a logic. If this value is greater than this value for a minimum downtrend, and for a maximum uptrend, we are going to understand this value must be smaller than this value. So it prevent losing upward and losing the downward. This really helps the algo to take a right decision. Okay, now how the uptrend will be decided? So the upper band and the lower band which we have calculated, if the price go above this value, okay, 104, the price go suppose 105, we are going to take a long trade. And if the price go below 95, we are going to take a short trade. That's a logic, simple logic. Price above super trend, then take a uptrend, take a long trade. Okay, one more thing. Now suppose you have taken a long trade and suddenly the market come down. So below 95, we are going to change it to downtrend for sure. But before that, I kept a loss of only 0.5% of the loss. So it will basically uh, trigger a stop loss and it will book the loss, and the similar profit also I have taken the same logic, 0.5%. So that we are using a capital of 1 lakh rupees. If 500 rupees is profit, it is going to book, and if there is a 500 rupees of loss, it is going to book. Because sometimes what happen, the price go up and suddenly trigger and come down. Otherwise, we can do one thing in this. We can keep this no change, or we will not book the loss until the downtrend start. So suppose you have taken a trade for an uptrend, the price come down to this band, we will not going to book the loss. That's what we can do with this. So price above the previous super trend, price below the super trend. So this is for the upside, this is for the downside. Okay, so now new trend is detected, 100 unit we are going to buy. If the new downtrend is detected, we are going to short the 100 units. Okay, book the profit on every 0.5. Stop loss is 2% of total, and if total loss is above 5%, the algo is automatically going to stop. After each profit and stop, it is going to show the PNL, the exit. It will restart the calculation for super trend in every fresh change in price. Now this multiplier, the super trend HL2 plus or minus ATR multiplier by multiplier, this will help us to adjust the channel continuously, and even in the calm market and volatile market, it works well. I checked it for almost 2 days running in the changing environment. So now I'm going to show how it works in this simulation environment. So this is the file which I've created as an exchange. Now what it do basically, it keep on changing the price. Let me close down all this window which is continuously running. So I keep on running this whenever there's a time. Okay. So now this is my actual window and I'm going to run this as an exchange. So I have no control over it. It keep on changing the price. It keep on changing the price. Okay. Now next is the algo. So algo is this part, the logic which I told you. Now let me run this also. Let's keep both the window together so that we can understand how it's collecting the price. So it is keep on collecting the price for 20 different prices. So first for first 20, the data will be collected. Okay, the initial super trend is been, the range has been come over here. It has taken the long entry at 102 because the price was 102. Long entry at this. ATR has been calculated. Okay, the current position at 102, we have long position. Unrealized profit it is showing. Okay, we book the profit also. See, it's so fast, it's book the profit. Okay, so the after 100 seconds we get the realized PNL. Okay, we have now the range as this value. It's so fast, it's keep on changing. It has taken a long position at 109. The current price is below that. So current long position is this, the realized PNL. We can see I have no control over this price. This prices keep on changing from the exchange. Okay, the algo waits sometime if the price does not come. Okay, we have stop loss trigger over here at 102. Okay, so long entry at again 1001. If the price goes up, we are going to get the profit. And if there's a 6-point difference, we are going to book the loss. So it shows how the long position has been taken. Okay, after 100 seconds, it shows the summary. Currently, we are in a loss of minus 500 rupees. It's completely okay. Okay, it shows the trend is now down. Trend is down. We are in long position, but it works. Why it is working still in a long position? Because we are in range. Still we are in range. Once the range go down, it is going to book profit or loss as per the requirement. So still we are in the range. We will not book the loss. The trend is still down. It's completely okay. We have control over our PNL. Okay, control over our PNL. So 0.5% of the loss, we are going to book the loss for sure. Okay. The price is continuously going down. Okay. See here, the beauty of the market. We are in 500 rupees profit. We are going to book the profit for sure. We have booked the profit. Okay. So currently we are in the profit of, see here we have booked the profit. The current long position again 1001. The trend is up. Okay, we booked the one more profit over here. You can see, you can check out this. Okay. Again, we have taken the long position. So this is keep on doing this. You need to run it for full day. Okay, now let me see the summary. What has happened with the algo? So there is a manual exit also. So I have stopped the algo. So for first cycle, it has taken the profit, then loss, then again profit. So keep on doing this for a full day in a live changing environment of the price. and you can analyze how it works beautifully. I check it for 2 days and it works beautifully. I hope this is clear to you. Thank you very much.